Hello, and welcome to Structured Finance in Focus, a Fitch Ratings podcast that takes an in-depth look at the latest developments across global structured finance markets. My name is Ben McCarthy. I'm a Managing Director at Fitch Ratings, and I head up the analytical team for Asia Pacific for structured finance and covered bonds. Today I'm joined by Tracy Wan, who's a Senior Director at Fitch based in Beijing. Tracy and I are attending the ABS Asia conference in Hong Kong on September 4th and 5th. And we thought today we would take the opportunity to preview some of the topics that we discussed at the conference and what's happening in structured finance markets in Asia Pacific in general. Tracy, welcome to the podcast.
Thank you, Ben. Happy to be here. I think we should start with an overview. Ben, what are the key themes for Asia Pacific structured finance in 2024 so far?
I guess there are a few key themes in structured finance in Asia Pacific this year. I break them down into roughly four. The first one is the issuance growth out of Australia. The second is the continued good credit performance right across the region. The third being the continued growth of new lenders and the fintech's involvement in structured finance. And the last is the increased investor interest in Asia Pacific and particularly the rise of private credit.
Let's start with issuance then.
The two biggest markets in Asia Pacific for structured finance, at least from a Fitch point of view, have really been Australia and China in the past few years. They have opposite stories in 2024. In Australia, issuance has boomed, and in the first half of 2024, issuance totaled over 43 billion Australian dollars, coming mainly for RMBS and auto ABS. The changes that are driving the increased issuance from this market, sort of threefold. One is that bank issuers have returned to the market and are issuing RMBS again. Non-banks are now issuing prime RMBS in volume when in the past few years they've been issuing more non-conforming, and so prime RMBS being the driver of the increase in issuance. And the last is that the auto ABS sector has increased issuance significantly following the banks divesting their auto loan businesses largely to non-banks, and the non-banks are using securitization in a much more significant way to fund those businesses than the banks had previously done. Issuers like Angle and Allied Credit, who've purchased bank origination platforms, have become significant repeat issuers in the market. And the exit of banks in general has meant that the auto loan sector has seen non-banks across the board increase their presence, and we're starting to see more securitization issuance across those lenders. Probably better if you describe the Chinese markets, Tracy.
Sure. China has had some well-publicized issues, particularly with the public sector, which have put a damper on issuance. So much so that RMBS issuance since 2023 has been zero. We actually expect this to continue into next year. On the auto side, issuance is subdued as well due to the slow economy and also banks taking bigger share of the market but not securitized. Although credit in general has remained pretty good. One thing for listeners to know on auto is that regulators have loosened the rules for auto loans around LTV. If you recall, China previously had rules requiring a 20% down payment on all auto loans, meaning the maximum LTV could be 80% for auto loans. As part of the stimulus recently to help revive the economy, they have removed the repayment requirement, so Chinese purchasers can now obtain 100% financing, which make auto loans on an equal footing with auto leases. We think this will likely result in a worse credit, although the market has performed so well previously. We do not think that will be a dramatic change in performance. Deals with these new products could come as early as this year. On top of auto loans, we're also seeing active issuance on auto leases and consumer finance ABS, which also attract international investors. Before we move on, Ben, I think we should also get you to cover Australia credit performance.
Thanks, Tracy. Credit performance in Australian RMBS and ABS continues to be excellent. At the start of the year, we had an asset outlook for both Australian RMBS and ABS as deteriorating, but the rating outlook was as stable. Both are still the case. We had the asset outlook as deteriorating as we expected the arrears to rise from the lows that were occurring during the pandemic. And this has happened, although in most cases we're still below the levels that were pre-pandemic levels. At this conference about a year ago, we said that the asset performance would deteriorate but we also said that it'd be modest as it was related to unemployment, and the unemployment outlook was reasonably benign. And this is proven accurate. Unemployment in Australia has been very resilient over time, and that's helped maintain the credit quality. I say that, but there are early signs of deterioration, largely coming at this stage through the self-employed, low documentation and SME space. So the increase in interest rates and rising prices caused by inflation and general sort of cost of living pressures are having an impact. But we do continuing to watch the unemployment numbers. The outlook for unemployment remains pretty sound. Tracy, I note you're speaking on the fintech technology panel at the conference. What do you think will be discussed?
I think we are going to hear a lot about the use of technology by lenders in origination, underwriting, and the servicing of loans, but a lot less about blockchain and digitalization. While blockchain was at the top of mind a few years back and is still being worked on, it has really fallen off the radar in ABS in recent years. In contrast, development and the use of technology on the lender side for application in origination, underwriting, and servicing has been significant right across the region. This ranges from lenders using big data to underwrite customers that have little or no track record, to automating the process to make the lending decision quicker. Examples we have seen include the consumer finance deals of JD and the 360 in China, where the finance is all applied for and approved online, to auto originations in Australia, where some lenders have rolled out platforms to ensure a credit decision can be made in less than time than it takes to do a test drive of a car. It really is interesting and a constant development. While we all appreciate the benefits brought by technology, from investor perspective, I think people may also be interested to know if there are additional risks imposed by fintech lenders. That's another potential interesting topic for discussion.
Thanks, Tracy. Any other topics you think the conference will cover?
Private credit really has made an impact this year and could get plenty of airtime. Private credit is generally looking for higher returns than standard AAA ABS, so new lenders, asset classes, and warehousing are all elements being looked at by private credit. We are really seeing them in the mezzanine space and seeing a much larger diversity of assets.
Thanks for your insights, Tracy. We might leave it there. And thank you to the listeners who've joined us. You've been listening to Fitch Ratings Structured Finance in Focus podcast. To learn more about our ratings and research in structured finance, please visit us at fitchratings.com. For those attending the ABS Asia conference in Hong Kong in early September, please reach out to us so we can catch up in person. And please subscribe to our podcast on iTunes, Spotify, or wherever you get your podcasts. Thank you.